Hey everyone, welcome back to the What Kind of Internet Do You Want podcast and our Web3 Wednesdays live show. I'm Amy James.
And I'm Devin James. The Bitcoin price is $26,704. And let's get into the news. Oh, I know what that was.
It's been a weird morning. It's been a weird week. It's been a heavy week. I'm feeling a little, disassociated or something, just with all of the heaviness of what has happened. War and the kind of terror that we have seen is not good for anyone, hurts everyone involved. And it's not something we're going to talk about on the show today because we talk about Web3 and it has almost nothing to do with that, including the financing. That's the one thing I do have to push back and talk about because the Wall Street Journal ran an article about how the terrorists were funded by cryptocurrency. And there is a danger that this narrative could do harm to our industry. And so it's just something that we have to talk about briefly. The article says wallets connected to Hamas received about $41 million over a certain time period. And then it goes on to essentially undo the argument that it's making that cryptocurrency is this big threat, because it further says, after saying that Hamas sought to publicly raise funds in crypto since 2019, that they then stopped publishing its donation address to protect donors' anonymity after Israeli and U.S. investigators tracked the transactions on the blockchain. And this is why something has to be said about this, because the plain truth is that this technology provides more transparency, more accountability than any other kind of technology available for financial transactions and for all kinds of information. And so this is evidence of why, sure, dollars can be used for nefarious purposes too. Criminals do things that are illegal. That is the definition of a criminal. And so using something that is a tool for an illegal purpose is illegal, is wrong, is criminal.
Doesn't make the tool illegal.
Right. It doesn't make the tool itself dangerous.
Right.
The danger is inherent just in being alive, and that is just part of life, that we have to interact with quote unquote dangerous things. You can use a knife to, cut up your steak for dinner, and you can use it to
hurt someone. Yeah. 100%.
And
100%.
so
yeah.
I just, I don't want to get into the terrible, terrible situation. But I do want to say that this is essentially another reason that we need sensible crypto legislation in countries that support the rule of law, because this technology is only going to help people and we need to embrace it.
Yeah.
So let's move on to another pretty bad story, but in light of the first one, not so bad, almost comical when you get into it. As I said before, the SBF trial about the FTX collapse. For those not in the industry, that would be Sam Bankman-Fried and FTX. I actually don't know what FTX stands for. How funny is that? It's just the name of the exchange that he committed his crimes using, allegedly.
Something trade exchange. I don't know.
So
exchange. I really don't know.
So anyway, last week I said that this story was boring because it was just a case of garden variety fraud and criminal activity. And last week when we did our show, it was jury selection had been happening, and we were expecting opening statements. In the week that has followed, we have gotten some incredible testimony from two of the key players involved in it, Gary Wang and Caroline Ellison. So the testimony from Gary Wang is the testimony that helped us to understand that Sam Bankman-Fried was the person who directed the other people involved in the crimes and told them what to do. And he told them to do things like change the code to allow Alameda Research, this sort of sister firm of theirs, to allow their account on the FTX exchange to have a negative balance, and also to trade futures. And that these privileges, let's call them, were unique to Alameda. Ironically, and this just goes to show even more that he knew what he was doing and he had intention to do things that were wrong. The same day that he told Gary Wang to create these back doors for them to use customer funds inappropriately, he also tweeted the exact opposite, saying that Alameda is a liquidity provider and their account on FTX is just like anyone else's. And so it just, what's so interesting or kind of like, I don't know if interesting is the right word, it's more like jaw-dropping, like you're just like aghast at the flagrant nature of these, I'm going to keep using the word alleged crimes, even though I'm perfectly convinced about them, so I'll just point you to, there's a thread that Martin Scarelli, ironically enough, did with the Q&A between the prosecutor and the Gary Wang. It's just like, there's also then the testimony now of Caroline Ellison, who began testifying in the last
this week, I think,
couple of days. Yeah. And she said that she engaged in fraud at Sam Bankman-Fried's direction, alleging that he set up the systems and told us to take the money, meaning take customer funds and use them without their consent to cover their costs, basically, including costs to do things like give money to politicians. And we'll see that here in just a moment. She admitted that she thought that customers were unaware, but that Sam Bankman-Fried told her, quote, not to worry because the auditors wouldn't look into it.
Why is that? Because he gave a lot of money to politicians.
And I think just because he has
not because he was following the rules or
like,
anything.
Weird connection with reality.
But also came out that he thinks he's going to be president.
He's some sort of one of those like narcissist, sociopath. Like, I don't know what the right prescription is, but he has some sort of weird connection with reality.
Yes.
And she also said that he gave $10 million to Biden because he thought it bought him access. So just another little bit there.
Yeah.
And another great thread about Caroline's testimony is from Tracy Wang, so we'll just pop that up really quickly. But that's just another just kind of like a jaw on the floor. I kind of can't believe what I'm reading. And again, just like our first story, this is a case where has nothing to do with crypto. Mm-hmm. Crypto was the cover.
It's the medium
for garden variety fraud. And the other really sort of twisted part of this to me is that you kind of like wonder how many people had to be involved in this. And it's clear that many were, and that many knew what they were doing was wrong. Yeah.
And they were fine doing it right up until it all broke down. And now they're fine talking about it as long as they're not going to get in trouble for it, as long as they're going to get reduced sentences, et cetera. Yeah. And it brings up, I don't remember who made this point. I think it might have actually been in Skrelly's point, that it's a really twisted system that we incentivize, basically just say, because we want to make it easier on the prosecutor to get a prosecution, to get the conviction they're looking for. It's more likely for them to do so if they can flip most of the co-defendants. So rather than holding everyone that was knowingly doing crime and hurting customers, hold them all accountable and put them all away for it, don't do that, make it more likely to get the one guy and use their testimony to do it. That's a messed up incentive system, because it means if you're not at the very, very top, you don't have to actually take responsibility for your actions. And
it's wild.
That's not good.
It's wrong. Yeah, the justice
incentive to put out
system
there.
is not fair and balanced to all of us, right?
No.
I mean, Caroline, I think that the difference with her is that she seems to genuinely feel remorse for what she did, and that she actually understood that what she did was wrong. And so, at least that, I guess. I don't really know what to say here, honestly, except that what's so sad is that these are the kinds of things that are getting attention when it comes to this technology.
Yeah.
And where we should be shining the spotlight is on the builders who are just relentlessly, day after day, trying to solve hard problems that will ultimately make the world better. They will make, yours and my internet experience better in terms of being able to trust the content that I see, in terms of being able to have access to it in difficult places, in terms of being able to speak freely, to have,
to not have your voice silenced if you say something that isn't popular.
To explore ideas and
Yeah.
and learn
What a
new
crazy
information,
Yeah.
and to help give more equality of access to information, to financial tools to transact and have markets for people across the world to connect information and people. And that is where the attention should be going, is to the hard-working, well-intentioned builders who have not only their hearts in the right place, but also their minds, their work. There are
They're
so
not lying
many
to themselves.
There are so many
Right.
people in the crypto industry who are in this industry for ethical reasons. Like, that is their driving motivation, is that they see the benefits of it. And so I just want to take a moment to give a shout out to those people, to say thank you for your work. Thank you for your dedication. And I do hope that your time in the limelight comes to show off all that you have done.
Indeed. I'm trying to think of a transition to this next story, because unfortunately it's not about that. It's about the bad news of what happens during crypto winter. So it's not even this story. I'm actually going to share a handful of these headlines. Blockchain analytics firm Chainalysis, I always have a very hard time saying their name, cuts 15% of their staff. This is actually the second round of layoffs this year. This is actually a much bigger company than I was aware of. They are said to have an employee base of 900. Like I said, this is their second round of layoffs. They previously laid off 5% earlier in the year, in February. And they basically just say this is due to market conditions. We are in the depths of crypto winter, and so they need to cut back on their costs. And the article mentions that Coinbase and Robinhood had to do the same. Well, Ledger, maker of the hardware wallet, the Ledger, which also has a very, very large staff, about 734, has had to lay off 12% of their staff, citing macroeconomic headwinds. These decisions were made for the, quote, longevity of the business, citing the 2022 bear market. In their case, I'm sure there's a little bit of resentment there that they literally raised $100 million earlier this year, or I'm sorry, just a few months ago, at a almost $1.5 billion valuation. But also, that's not all of it. The ASIC firm Bitmain, which, if you're into the Bitcoin mining space, you understand they make all of the Bitcoin mining hardware out there that is relevant, is also not even laying people off. They stopped making payments back in August to their employees, since September, and they eliminated bonuses and incentives. It's apparently a temporary measure while they are kind of evaluating, and then they would decide if they're going to, after the Chinese holiday, they're going to decide whether their employees could face up to a 50% pay cut, or obviously unspoken, but possibly some layoffs. And again, this is because of lack of positive cash flow, particularly in new ASIC orders. when Bitcoin's price is down, when competition is up, when there's a lot of miners, it's harder to earn a margin on it. When somewhat recently, I think there was actually a dip in difficulty. I know right now it's, I think, at the all-time high, but whenever there's a dip in difficulty, it means there's an opportunity to turn back on old miners that you might have turned off because they weren't efficient enough. But there's also, we've talked about a couple of different stories about there's a whole bunch of emerging new ways to mine where electricity cost is not relevant because you're not buying from the grid, say mining from your volcano or mining on top of a garbage dump that's producing methane. So as more and more of these things are coming online, and the cost of the kind of international or nationwide cost of electricity is less relevant, older hardware that's less efficient is a little bit more reasonable to use. So there's more competition, and there's fewer people in the market to buy new ones, and so Bitmain, accounting for an estimated 70% of Bitcoin ASIC hardware market share, has to actually take measures like this. And that's not even the end of it. Obviously, this is more of just like a report summarizing this whole situation, that we are at a 3-year low of fundraising, which fits with the cycle, the 4-year cycle.
Yeah, absolutely.
That just last year we hit an, I think, all-time high in 2021, and now we're at the lowest level in 3 years. Investors, interestingly enough, are concentrating on new investments in early-stage projects and infrastructure investments as opposed to user-facing applications. They didn't go in any more into detail. I wonder if that might mean DPIN to some degree. It could also, of course, mean things like mining and other types of mining and stuff like that. Rather than user-facing applications.
That's the part that stuck out to me too. There's this problem that we're facing as an industry that so far no one wants to invest in that last mile, in the part that gets it actually in front of users. And there's a reason for that, right? Because the addressable market to get to a certain demographic of users is smaller than the addressable market to be a foundational protocol that would underlie everything. And so the incentive for the investor is not as high.
But the competition to be that bottom layer is significantly higher, because if you believe in a version where there's only very, very few of those bottom layers underneath each kind of use case, it's almost a winner take all, which isn't usually the case on the application market. So I don't know.
That's true. I think
also
oversight, though, is that if we don't have applications for end users, the protocols mean nothing.
Exactly. I think it's a weakness of the fat protocols thesis. I think people still believe too much in the fat protocols thesis. And to kind of reiterate that for anyone that's unfamiliar, there was kind of some thinking that some VCs did to try to figure out, like, why is so much value in the previous era? Why was it going to apps built on top of the web, and now it's going to protocols that are supposed to be underneath other applications? And their theory was that since the protocols that deliver content over the internet and the web don't have the ability to transmit value directly, people had to invent ways to transmit and thus capture value at the application layer. So like the most direct version of that is literally making a payment or using, something like PayPal. They have created a mechanism on top of the underlying protocol layer to transmit value, and thus they could capture their amount. Ads are the same thing. So on YouTube, same thing kind of thing. Whereas on the protocol layer in the blockchain land, the protocol does transmit value, and thus that might, in fact, be a much more efficient place to capture value if you're an investor or a creator in the space. If you're moving a whole bunch of value through the bottom layer, through the protocol layer itself, say Bitcoin or whatever other kind of thing, Ethereum, then capturing it there is also the best opportunity. And the only way to really capture it, because people don't like a cut going off to the founder and stuff like that, is to own a share of those tokens early on. It's turning out that that's kind of backfiring as far as the SEC is involved, and also it doesn't scale, because part of the problem, what we were just talking about, like there's just no incentive for anyone to build applications, and
that's right.
And users are not going to adopt protocols. They're going to adopt applications that are built on top of protocols. So I would argue that it's just a lack of awareness that there is another possible way. Amy came up with a term for this that was kind of built around a theory that we were working on for a long time, and I haven't really seen it too much in the market yet. I'm starting to a little bit. I think with Universal Data License is a good example of it. What we called salutary protocols, where it's not too thin, which the internet protocols were, and it's not too fat, which is this current kind of premise of just buy the token at the beginning.
Here.
Sorry, thank you. It's in fact healthy, which another term for that is salutary. So salutary would just mean that the application actually captures some of, or the protocol directs some of the value that moves through it to the application being used at that time to conduct that transaction. So it incentivizes both layers. So anyway, total aside there, I'll be curious if that idea catches on and if more investment does flow into it at that stage. But I'm unfortunately still going through the headlines of the bear market conditions. I know. I know. So Chia, actually, this one may or may not be kind of about the bear market, but Chia Network has had to lay off a third of its staff. They actually have been on a really different path than most of the protocol startups, the layer one startups, where they decided, you know what, these things are securities, so let's just lean in and be a security, and let's actually file for an IPO opportunity. They were working with a giant bank called Credit Suisse to do this, and if you're not familiar, Credit Suisse is now owned by UBS. They blew up earlier this year. They're one of the big banks that came crashing down this year, so they lost them. They apparently have a new banking partner. They won't say who it is yet. But losing them seriously delayed things. But then the other part of it is working with the SEC has not gone as smooth as they thought it was going to. Stunned. Interestingly enough, I mean, now this is strange. Chia was founded by the inventor of BitTorrent, Bram Cohen, who a lot of people think of as like the ultimate, crypto anarchist. Like, how is anything more kind of anarchistic against the state than BitTorrent itself, kind of thing? And they went with a different route. They said, hey, let's try to be friends with the SEC and see how useful that is. So far, it's dragged out so far that they have now had to cut some of their staff, and it's looking like they may have to sell some of their own tokens, which they've never done before. It would be a tiny amount, apparently, according to the CEO of the company. We're not going to sell even a material amount. They hold $70 million worth. So
I wonder what percentage of that is of the total token supply.
There are 21 million, and they hold 2.6 million, so about 1%.
Okay.
A little over 1%. So, the price, just because of this kind of rumors and whatnot, the price fell a little bit because of it. But they were basically holding back, like a lot of other people were, not wanting to be accused of being a security by the SEC, but because of recent court cases involving Ripple and Terraform Labs, have demonstrated that a carefully decentralized token can satisfy current standards for defining a digital commodity. So they think it's worth taking the risk. While much of the industry is waging an open legal war with the agency, Chia has tried to walk a tightrope to meet U.S. regulators' expectations. And it hasn't really worked out so far. And then you look at someone like Coinbase, who actually got approved to go public. They are a publicly tradable company. And then after the fact, the SEC said, hey, we don't like some of the things you're doing, which is a little bit weird. So, we wish them luck. It's a very interesting approach at running an L1. So, fingers crossed that actually works out, at least that they're able to do their fundraising legally. And then the last one in this kind of realm, hopefully this really has nothing to do with the bear market and is really just the moves that happen. But the Ethereum Foundation, or at least a wallet that is associated with the Ethereum Foundation, it's tagged as a grant provider by Etherscan, moved about $2.5 million and traded for USDC on a DEX. So they haven't really put out any statements about why. Obviously everyone needs operation funding and stuff like that, so it's pretty likely that that's all it is. But it did cause about a 2% loss in the price. But they are sitting on over $1 billion in Ether, which
crazy.
I was really glad to see represents 1/3% of the total supply. And there is never really an ultimate total supply because it's constantly created. So It's obviously a tiny amount that they hold, and I wouldn't say that it has that it suggests that there's any danger at the Ethereum Foundation going out of business. It would have to lose 99% of its value for them to go down to having only $10 million worth of, you know what I mean? So not going to happen. They're doing well. I think it's fine. I think people just react the way that they react, and that is what it is. Yeah.
Yeah, that makes sense. Yeah. Oof. Heavy first half of the show, man.
I'll say.
Terrorism, crime, and the depths of crypto winter.
Crime.
On that note, there is the upside that the message gets out regardless, right? That Bitcoin is hope. And, the world's biggest podcaster just said so recently. So let's hear what he had to say.
Yeah.
I mean, the real fascinating crypto is Bitcoin. To me, that's the one that I think has the most likely possibility of becoming a universal viable currency. And it's limited in the amount that there can be. It's, people mine it with their own computer. It's like, that to me is very fascinating. And I love the fact that it's been implemented, and that at least I've had Andreas Antonopoulos on the podcast, and when he talks about it, he's living it. He's spending all of his money. Everything he gets paid is in Bitcoin. He pays his rent in Bitcoin. Everything he does is in Bitcoin.
Yeah, so obviously that was Joe Rogan, and what I love hearing people talk about why they like Bitcoin, because it's just one step further for them to understand why I love Web3 and why they will too, and not in a very short order following Bitcoin, right? That Bitcoin has a story that has been much more well developed because it's been the primary focus over these last more than 10 years. Yeah. And it has this big community now that supports it. And the using that same technology to build the foundational infrastructure for Web3, those DePIN protocols, the decentralized physical infrastructure networks, or as I've been calling them lately, the decentralized public infrastructure networks, that infrastructure that is necessary, that allows us to be streaming this video to you right now, the video transcoding, the file storage, all of those things that are inherent in how we use the internet every day. Those protocols are currently closed and controlled by a handful of companies, and using the same technology that makes Bitcoin so incredible and powerful and an international asset, as people are starting to understand, is what makes Web3 protocols for video transcoding and file storage and cloud processing and all of the rest of the decentralized public infrastructure that is being built for Web3, makes it possible to change the nature, the shape of the internet in a way that is far more efficient, equal, powerful,
beneficial to everyone. Yeah.
It's just it's so exciting to see. Yeah. It's just like, I feel like it's like the foreshadowing of hearing him say this in another few.
Well, especially just because from some of the things he said, it suggests he's under an incorrect assumption about, because he's specifically framing that around. I like this one in particular because there's a limited supply. Well, almost every single blockchain-based token has a limited supply. It already exists. I get why he would say that. A few years ago, when everyone was coming after him, wanting to talk on his show, they were talking about a lot of theoretical things. Now, the vast majority of important ways in which this technology can disrupt the internet, there is at least one existing fully working version of it, protocol, and sometimes apps built on top of it. So I think, and he really likes Antonopoulos, and Antonopoulos is a fantastic speaker and just a fantastic educator about this stuff. So he trusts him to a high degree, and so he kind of defers to him about, since
well, it's
he
like
makes
he said, though, Antonopoulos is supposedly paying his rent in Bitcoin. He's living, and we were friends with a family that was living off of Bitcoin as like a tour to kind of teach about that, right? And they were doing it 10 years ago when it was
really hard to do.
Painfully hard
Now
to
it's
go
not.
through that, right?
Yeah.
So we are now at that kind of precipice of being able to do that with Web3 technology,
Yep.
where there isn't really an example of somebody who can say, here I am, here's this app you can use, here's my website, here's whatever it is that's decentralized all the way down, that uses all of these different decentralized protocols.
But when that happens,
but people are working on that right now, and we're going to see those coming soon, and we're going to then see the follow-on effects, all of the features and benefits that using those decentralized protocols provides.
Agreed.
And then it will just be crystal clear why we need this, and it will be so exciting.
Indeed. Well, speaking about exciting things and Bitcoin, the Lightning Network, a organization called River, has put out a research report that is linked in our show notes, and primarily I just want you to look at it and get into it because it's got an enormous amount of detail there. It's basically reporting that based on their analysis, the Lightning Network is growing at a parabolic rate, up 1,200% in 2 years. Just kind of insane. There's a few little bullet points that I wanted to kind of show. That where are we? Sorry. 6.6 million is what they expect to be the lower bound of the quantity of Lightning transactions in the month of August of this year. Now that's the lower bound. They actually make the point that they can't define what the upper bound is, because direct transactions between only two participants and private transactions cannot be estimated. So, believe it or not, Lightning Network, despite what a lot of people thought it was going to be, is a potential privacy solution. If a transaction is being routed between a whole bunch of different parties and stuff like that, some of that privacy can be lost, and that's in fact why they're able to give some amount of intelligence on it and some amount of analysis of it. They looked at 52% of the nodes and surveyed them and looked at their data and stuff like that, and thus they were able to drive this stuff. But they make the point, they don't actually know what the total bound is or what the total amount was. They estimate that almost $80 million was publicly routed using Lightning in August of 2023. The average transaction was almost $12. And they make the point that the size distribution shows that nearly all Lightning payments are unaffordable on the actual layer 1 Bitcoin blockchain itself. So it is effectively extending Bitcoin's utility by enabling low value payments over the internet. And I skipped over this, that Bitcoin's on-chain transaction per second rate is 4.4. And Lightning itself got 2.5. So the point is, it increased it by about 50% because those aren't being, most of those transactions are not being settled on chain. So those are supplemental to Bitcoins. And this is an interesting one. They also then get into the companies that are working in the Lightning space. Amongst all the different companies, how much are they raising? They raised about almost $500 million over the course of 4 years. And they made the point that 19%, almost 1/5 of all Lightning companies have received funding, which is definitely higher than most averages overall. So that is quite fantastic.
Love
Congratulations
to see it, you guys.
Yeah.
There's been so much FUD around Lightning. Like, there were so many people that were saying, is it even real? Is it even going to work? When it was first getting started.
People still claim it doesn't work.
Years ago. And then I've heard another round of that over the last year. So I'm really happy to see like actual data showing their success. I think the technology is really powerful. It's really interesting. It has a really great team that's been building it all along. And so congrats. Well done.
And since it's being built with open source software, transparently, openly,
in public,
the vast majority of other blockchains, especially blockchains that either ideologically forked from Bitcoin or were a direct fork from Bitcoin, certainly just use a UTXO model, can use it. So a lot of people have considered that Lightning is like a threat to the quote altcoin community or to the Web3 community. I don't see that at all. I see this ability of disambiguation and scaling using on-chain functions and smart contracts as a combination is a really smart way to do it. It doesn't have to be the only way to do it. You can apply multiple different mechanisms for scaling. And one of the really interesting things, and I haven't followed this particular line as closely, but another version of a Lightning Network type transaction is called an XCAT, cross-chain atomic trade, where it's basically something like a Lightning Network style, using those same smart contracts transaction on two blockchains so that they settle with each other and there can be an immediate swap without an intermediary. Yeah. Especially if a multitude of altcoin chains, UTXO based altcoin chains, took the work that is being done on the Lightning Network and applied it on top of this, on top of their own networks, it would open them all up to being basically cross-chain swappable with Bitcoin and each other, and that's very exciting to me. That's very, very, very cool. I'm a big fan. I hope it doesn't ultimately turn out to be nothing but smoke and mirrors like some people are worried that it is, but I really see very little evidence that it is. I've used it a few times myself. I like it. It generally works, and obviously this report demonstrates there's an enormous amount of actual use happening on it, which is awesome. So,
yeah, absolutely.
Quick dive, we'll just say a toe in the water of AI this week, because I think it's the only story we're going to talk about on this one. About 2 weeks ago or so, maybe a week ago, I don't remember, somewhat recently, ChatGPT made some big news, big waves by announcing that they were vision, that they had enabled vision and voice. You could now, with the app, you could talk to it and it'll talk back to you, and you could take pictures or upload screenshots, and it can analyze those. I've used it myself.
Insane how fast the progress is happening with this stuff. Like, wow.
I've used it itself. It has had really great, it's worked really well in some cases. It has completely not worked in a whole bunch of frustrating cases, which is frustrating. It is what it is. But like you said, we're advancing incredibly quickly here. To go from something that used to just be able to talk to you and not very well, to now be able to interpret the world with eyes and ears is pretty stunning. But what's especially cool on the open source front is that this image recognition functionality now has a new competitor, which is open sourced and completely free to use. What I didn't mention there is I'm pretty sure that the CPT-4 ChatGPT-4V Vision is only for the pro users that spend $20 a month or whatever. This, in fact, is open source and completely free to use. This is called Lava, Large Language and Vision Assistant. And Rowan Chung, who tweets about a whole bunch of AI stuff, follow him if you're interested in the space, did himself a little demo where he uploaded a picture that he took of one of the kind of hilariously confusing combinations of parking signs saying you're allowed to park this time, not this time, and some of them are overlapping and stuff like that, just to kind of test its ability to interpret the picture, its ability to interpret English, and its ability to kind of put together kind of a complex thought of slightly overlapping, maybe confusing kind of things. And it gave him a great answer. Whether it's correct or not, I don't know. It might be wrong, but it actually got back to him with a nice, simple answer. So it's this little demonstration that the functionality works, and this is all open source, which is really quite fantastic. I expect that a version of this is either already running on a cache or will be soon. We'll see. So awesome. Very exciting. Yes.
Super awesome. Yeah, I'd love to see open source AI development. So important in the future of that moving in a positive direction. All right. Well, moving on to our last segment, and that is, of course, the regulatory news. We're going to give it over to our new policy guy, Eric.
Hey everyone, Eric Peterson here with the Web3 Working Group, giving you your weekly update on all things politics and policy. Obviously, it's been a wild week with Congress losing its Speaker of the House, Kevin McCarthy, and now it looks like the two most likely successors are going to be Jim Jordan from Idaho or Steve Scalise from Louisiana. As far as crypto is concerned, neither of these representatives has said a lot about the industry. However, if Steve Scalise was voted to be Speaker of the House, this would most likely move up Tom Emmer, who is currently Majority Whip, to be Majority Leader. Congressman Emmer has been one of the most vocal supporters of crypto and critics of the SEC in Congress, so that would be a big win for the crypto industry. Now, obviously, events in the Middle East have people not really thinking about cryptocurrency right now. So we're going to talk a little bit about what happened 2 weeks ago. We talked a little bit about the SEC and a lot of what they've been doing in regards to the crypto industry. On the same day that the hearing was 2 weeks ago with Chairman Gary Gensler, a bipartisan group of House members led by Representative Mike Flood of Nebraska, Congressman Hill, Congressman Nickel, and Congressman Torres all put out a piece of legislation that would deal about how banks hold cryptocurrency. Currently, there's guidance out called Staff Accounting Bulletin 121. Basically, this says that if a bank custodies cryptocurrency, it's a liability on their books, meaning that they need to hold enough cash to cover all of the cryptocurrency they're custodying, even if they're not lending it out. Obviously, this makes it really unprofitable for banks to custody cryptocurrency because it's essentially a money loser as they have to hold more reserves, and more reserves means they can make out fewer loans, which is where they make their money. This legislation would specifically overturn that policy and make sure that credit unions and banks that custody cryptocurrency would not need to host them as a liability on their books. Now, this legislation just got introduced, but it has some real heavy hitters behind it. Outside of Congressman French Hill, who is on the Digital Asset Subcommittee, it also has lobbyists behind it like the Bank Policy Institute, which is very successful in Washington, D.C. Unlike a lot of the other cryptocurrency regulation we've seen proposed by Congress, this specifically has the backing of large financial institutions. So let's see if that can help it get over the finish line. Thanks so much for joining, and I will see you all next week.
Thanks, Eric. Eric obviously recorded that segment for us, so he's not live with us just now. And what we know is that just at this kind of, as we were beginning to go live today, the House did have a vote, and they have voted for Steve Scalise, nominated by the Republicans to be the next House Speaker. The vote was 113 to 99 in favor of Steve Scalise over Jim Jordan. So that's interesting, especially because of what Eric noted, that it lines up Tom Emmer to have
be the majority leader.
Yeah, which is wonderful. Emmer is just an incredible champion, not just for Bitcoin, but for Web3 in general. He really is among the few that genuinely understand the power of this technology and how important it is to create a regulatory environment that will keep it here in the US. And on that note, we just have to mention that once again, the US is lagging behind several other countries. So we now know that the British Treasury is planning to launch a sandbox for digital securities in the first quarter of next year. And this is, it's alarming to me in some ways, because we are seeing some companies move to the UK because they have a comprehensive legislative framework for crypto companies. And we have seen like large investment firms like Andreessen Horowitz have moved to open an office there now. And now they're going to have this sandbox. And sandboxes are particularly, is that what they're calling it, a sandbox? Yeah. They're particularly important kind of exemption because they promote innovation. And so any kind of safe harbor or sandbox legislation is something that is incredibly welcoming to entrepreneurs and innovators and incredibly important in moving things forward. The same is true for Brazil. They are planning to have a second regulatory sandbox program in 2024. And in Canada, who has been notoriously strict, negatively strict, they have relaxed some of their stablecoin rules. We often talk about the threat of companies leaving countries that are not welcoming, and people kind of think, oh yeah, right, like that's going to happen, you know, when something is entrenched. And yet, it does. Canada has experienced that firsthand. They had Binance, Bybit, OKX, Paxos, DYDX, and Bittrex all exit the Canadian market when they had some very stringent regulations in place. And they have since rolled that back to soften them with this new set of regulations. So,
wow. I didn't know that.
Yeah. I don't want to end the show here on a bad note, but it's just definitely alarming to see our country continue to be mired in the regulatory uncertainty that we have, and yet see the rest of the world trying to welcome cryptocurrency in.
Honestly, I say we call that a good note because, one, Canada is a very close ally of ours and follows our regulations very closely, and they learned their lesson. They saw companies that were important to them leave. That is starting to happen here. Maybe not necessarily leave as much as set up operations elsewhere so they don't have to be dependent on the U.S. I haven't heard of anyone actually shutting down operations in the U.S. yet, no one big at least. But that will happen. And also, it is entirely, you don't always have to learn from your own mistakes. You can, in fact, learn from others. So maybe we will learn from that. And maybe, the election of Scalise and, the elevation of
There's some
Emmer
great legislation
news.
that is pending that
Yep.
we would love to see move through, and we will definitely keep our eyes on that and keep you guys involved in that conversation as we hope to positively influence it through our educational efforts. We hope you guys are all having a great day. Remember that bear markets are for builders, and we are seeing your efforts and appreciating all of the hard work that you are doing to make the web a better place for everyone. Until next time, we'll see you next Web3 Wednesday.
Thank you so much. We will see you next week.
Thanks, everyone.
Bye.